Cosmos's largest DEX, Osmosis, launches a stable swap, and China confirms it is the mystery massive gold buyer with its first official purchase in 3 years. We will unpack this on why they bought it, what are the implications, and how we should react and interpret this. Hello, everyone, and welcome to the Assets of Value podcast. Today, on December the 8th, and every day, we connect to share our insights and perspectives on crypto, Web3, and NFT topics. We are the founders of Assets of Value, Web3 research organization. Our podcast is not to be taken as legal or financial advice. Abe, it's nearly the end of the week. It's Thursday. Tell me what the markets are looking like today.
Hi Shrab. Bitcoin is trading little shy of 16.9k. That means we are still stuck in the range of 16.5k to 17k. And this situation has been going on since mid-November. And Bitcoin dominance is still sitting at 40.53%. That means whenever Bitcoin pumps, all coins will follow. And all coins have the highest probability of outperforming Bitcoin because the dominance is on the fall right now. But other than that, the market looks stable. The Cosmos ecosystem is taking a hit right now because that's pretty normal because from the biggest dump in November, it's almost 23, 24 days. And we are assuming that Cosmos stakers must have unstaked some of their Cosmos and they are selling right now.
I see Cosmos is under $10. Usually it doesn't stay under $10 for all that long. Currently it's trading at 961. I've not personally checked the prices for a long while. I'm beginning to share your sentiment where the market is boring and you're getting frustrated. Ethereum is at 1,243, BNB at 286, XRP at 387, Polygon at 90 cents, Polkadot $5.31 at the time of recording, and Solana hanging on there, still above $10, but $13.52, a massive fall from grace. It's good to check in with the top altcoins as they were regarded in the last bull run. But yeah, it's just flat in either direction. No big pumps and no big dumps at the moment. It just feels like it's stabilizing. We've got a bit of a subject today that we want to take a closer look, and that is where China has actually bought a big chunk of gold with its first official purchase in 3 years. Why do you think China is choosing to buy gold at this point in time and the first time after 3 years? Why did they buy it?
You know which asset perform the best or hold its value the best in times of recession? One is cash, but cash doesn't appreciate, right? Cash at best tries to save your purchasing power and maybe hold it for the maximum of 3 to 6 months. Second is gold, and we know that gold appreciates with time, and the purchasing power of gold stays stable and inclined towards the top. So, what does it mean when a big country like China buys gold? Because China is anticipating something.
So gold, we're saying, does have intrinsic value and it's a good hedge when times are tough. I think this is common knowledge. Is this gold purchased by China the signaling to the rest of the world that tough times could be coming and they are just positioning themselves with a big purchase of gold to kind of hedge that risk? It feels like that's the case. And it also feels like they are coming out of COVID and have seemed to have come over that shock around Evergrande and the whole housing economy and the associated companies that were affected. They seem to be pulling out of that pretty gracefully. What are they telling us with this gold purchase?
Yeah, this is pretty strategic right now. Let me shed some light into that factor with some data. Gold is trading at $1788 per ounce, and it has performed quite nice since its fall in November. From mid November, gold has done a 10% increase. That's awesome, right? In this market, gold has performed 10% in just 15 to 20 days. And speaking of which, we have China just refilling its gold basket. Why China is doing this right now? Because China had a perfectly good opportunity to buy at 10% discount just a couple of weeks back. But China is being clever in its tactics because now China is trying to absorb excess liquidity of gold and trying to hold the price of gold. And China is doing this with some intentions. And China probably is anticipating that a rough year is ahead because in that year, China could actually grow its wealth by holding gold and maybe switching into dollars afterwards. That also means that US dollar will be losing its dominance in the coming year. So 2023 will be a roller coaster ride because countries are taking moves. We also discussed some crazy moments from Russia regarding Bitcoin and Saudi's attempts to join BRICS, and these have multi-dimensional impacts.
So, when a country the size of China decides to make a gold purchase, how long do you think they are planning ahead for? I do anticipate 2023 to be a slower year for growth, but with China's purchase of gold, how far are they planning out into the future? And what are the implications of this? You mentioned that they're trying to stabilize the price of gold by making this purchase. We also spoke about Saudi Arabia, who we know is oil and gold nation, who are attempting to join the BRIC nations. What are the implications with China making this move now, and how far forward do you think it is planning ahead for a bumpy ride?
Because currently Chinese citizens doesn't have access to crypto, they don't have access to US dollar because it's quite expensive and difficult to get. And Chinese government is trying to stabilize not only the gold prices in their country but also match Chinese citizens demand for gold, because for a fact when China last purchased gold of this magnitude, it was just right before COVID, all the lockdowns and everything. China purchased something like this. I'm not saying we'll have another COVID like situation with lockdowns and everything, but I am guessing that China is seeing something in the coming years, because if you look at the DXY or the stock market, we are way ahead in the last decade. People got rich by holding anything. If they hold Shiba Inu, a meme coin, they would be 650,000x richer. And this points to a market bubble, not only the crypto market, not only the stock market, but an overall financial market bubble, because things are crazy expensive right now. People will never believe that they would be paying at least 10 times the price just within 10 years. And that's the average consumer spending rise I'm talking about. Everything is inflated, and China, it is right to anticipate something cruel, something gloomy, or something very stable without any moves.
It looks like they are preparing and adjusting their risk exposure by investing in gold. So, how should we interpret and react to this situation that China is making a bulk purchase and it's doing so to protect itself against any potential financial risk, as well as any volatility within the dollar or in the economic and macroeconomic and global political landscape? Should we be also buying gold and copying that smart money, or should we be holding cash because we're not anticipating this downturn to last as long as what China's horizon historically is in terms of planning?
Brilliant question, Shab. What should we do? That depends who you are and what's your risk profile is. For example, if you are an institution, you should be trying to minimize your risk as much as possible, because if there's a rough year ahead and your organization is not making or generating any profit, then it will be hard to sustain your business, and you should be investing in stable assets that can give a stable outcome or a stable ROI. But if you are a moderately risk taking investor, for example, you are investing in stock market, I think you should continue to do so, because even though stock market is on the verge of a big collapse, it's compared to 2020 levels and the humongous rise in 2021. I think most of the stocks have fair price right now. I'm not mentioning Tesla stocks or Amazon stocks. Those big stocks are a bit overpriced still, so you can wait on that. But if you are in crypto, that's where we are, right? We are in for big gains and we are willing to take bigger risks also. And at this point, I think holding on to metaverse tokens, holding on to DeFi tokens, holding on to gaming tokens doesn't make sense. If you are holding Bitcoin or Ethereum, that's fine. How far that can go, right? But if you're holding any other assets, for example, you are holding a gaming token, that game might not even survive the winter. So you should consider exiting that.
DeFi tokens, gaming tokens, metaverse tokens, all of these projects do take a lot of development time to hit a realization cost in terms of profitability. So you're right in saying to remove or reduce the risk exposure if anyone is holding these assets, rather than cash out of the market, maybe transfer it into Bitcoin or into Ethereum, which if there is a further drop or a further downturn, or for a prolonged period of time in 2023, the risk to downside exposure is somewhat limited when it's compared to something that has not fully been proven in the shape of metaverse or DeFi or other types of coins or investments. So, good call there, right? I think anyone that's holding any type of token needs to assess their risk and appetite to risk for sure. We are nearly approaching the end of the episode. I cannot believe it's gone as quickly as it has. I won't ask you for low cap gems. I think that would be a contradiction to what we're discussing. But from a research perspective, what are you looking at now?
I'm looking at 1 inch because there's a massive unlock happening in December 30th, and that will bring one circulating supply up to 10%. And 10% is massive, even if it's a bull market.
Okay, so 1 inch is having a token unlock, and that suggests to me that you could potentially be positioning yourself for a short or a sell on this token. Is that correct?
Exactly. And please don't get me wrong, I love 1 inch as a project, but with this much token unlocking, and these are VC money, these are team money, and they'll be trying to sell off and take profit because 1 inch did perform pretty well in the last bull run.
Thanks for that, Abe. As always, it's been super fun. I'm glad you were able to jam with us today. That's it. Until next time, thank you, everybody, and we're signing off.